Chinese startup DeepSeek's launch of its latest AI models, which it says are on a par or better than industry-leading models in the United States at a fraction of the costs, is threatening to upset the technology world order.
Chinese startup DeepSeek has roiled global stock markets with the launch of its latest artificial intelligence models. The company says they are on par with or better than industry leading models in the US at a fraction of the cost, which has led to steep declines for AI chipmaker Nvidia's shares and others. Here's what we know about the company and its product development. Since the release of OpenAI's ChatGPT in late 2022, Chinese tech firms have been scrambling to create their own chatbots powered by artificial intelligence. DeepSeek says two of its models have been showered with praise by Silicon Valley executives and US tech company engineers and are on par with OpenAI and Meta's most advanced models. It also says that one of them is 20 to 50 times cheaper to use than an OpenAI model depending on the task. One technology CEO told CNBC he thinks DeepSeek is using Nvidia chips which are banned from being sold to Chinese companies. DeepSeek did not immediately respond to a request for comment on the allegation. The company is a Hangzhou-based startup whose controlling shareholder is Liang Wenfeng, co-founder of quantitative hedge fund High Flyer, based on Chinese corporate records. It is unclear how much High Flyer has invested in DeepSeek. The two companies have offices in the same building, and High Flyer owns patents related to chip clusters used to train AI models, according to Chinese corporate records. DeepSeek's success has already been noticed in China's top political circles. Last week, on the day DeepSeek released a new product to the public, company founder Liang attended a closed-door symposium hosted by Chinese Premier Li Qiang, according to state news agency Xinhua. Liang's presence at the gathering is potentially a sign that DeepSeek's success could be important to Beijing's policy goal of overcoming Washington's export controls and achieving self-sufficiency in strategic industries like AI.
According to an analyst, DeepSeek's success could prompt the US to reconsider its trade policies.
Yeah, so DeepSeek is just another one of these artificial intelligence companies, and is really trying to compete with some of the big players in the US, like ChatGPT. So you have OpenAI and their different models. You have Google with Gemini. You have Meta with Llama. And really, DeepSeek is a Chinese startup firm that is trying to compete in that space. This really goes to show that necessity is the mother of invention, as the old saying goes. Is they don't necessarily have the tens of billions of dollars that some of these companies in the US have, and they wanted to compete. They had perhaps a better algorithm, a better idea about how to train the models, and then also how to execute on it for answering people's questions. And they are using a slightly different technique, which is apparently, based on the data so far, a lot more energy efficient and efficient in terms of the chips that it might take as well. They were able to really do this on what some people would call a shoestring budget. It is one of the things that I think people are really wondering is a company like Nvidia, where they were viewed as almost having a monopoly or a really, really strong moat around the whole chip and artificial intelligence ecosystem, that maybe that moat isn't quite as strong as what people originally thought. That could be why their stock is down. I think the jury is still out, see if whether or not all the data that we have so far can actually be validated, but it does suggest that maybe we don't need to throw tens of billions of dollars at these issues in order to develop something that's usable for the general public and for industry. I think that it actually just shows how when there is a profit out there, it invites competition and innovation. And sometimes when somebody has a monopoly or perceived to be a monopoly, it actually goes to show how that profit motive can take away that monopoly power pretty quickly. Now, like I said, it's still early days. We have to see if that is indeed true, but it does look like investors are thinking that the beneficiaries now of artificial intelligence won't just be the chip manufacturers, but it's actually likely to be those companies that are able to use the technology profitably. Yeah, this could really be a change in the script, a change in the narrative around artificial intelligence, where it's no longer about what has been called the picks and shovels, which is just a reference back to the gold rush, where the ones who made a lot of money during the gold rush era were the people who are selling the picks and the shovels. And so far with artificial intelligence, that was like Nvidia, as far as with the chips that they were selling, and maybe even the data center providers. Now it's moved on from the picks and the shovels more to perhaps the refiners and the jewelers in that narrative, where it's more about what's the actual use case of the technology. So perhaps this does show that smaller companies will be able to compete in that space, and it's going to shift the narrative away from picks and shovels more to the refiners and the jewelers of artificial intelligence. Well, I think that really we do need to worry or maybe wonder about how President Trump might respond to this news. Does it come about that because the really restrictions on exporting chips to China apparently didn't really work all that well? And does it more have to shift away from embargoes and restrictions on the exports to more subsidizing US technology instead? So perhaps we could even see a change in the narrative around policymaking away from tariffs, embargoes, and restrictions, more towards subsidizing and trying to incentivize domestic technology instead.
DeepSeek said on Monday it will temporarily limit registrations due to an cyber attack after the company's AI assistant amazed sudden popularity. The startup earlier in the day was also hit by outages on its website after its AI assistant became the top-rated free application available on Apple's App Store in the United States.
Chinese startup DeepSeek, whose new low-cost AI model rattled tech stocks Monday, suffered a large-scale cyber attack, causing it to temporarily limit registrations. Earlier in the day, DeepSeek said it was hit by outages on its website after its AI assistant became the top-rated free app in Apple's U.S. App Store and overtook ChatGPT in downloads. DeepSeek claims it uses cheaper chips and less data, challenging the idea that advanced semiconductors, like those made by Nvidia, are needed to run AI applications. That sent major tech stocks tumbling, with shares of Nvidia falling as much as 17.8% at one point Monday morning. Brian Jacobson is chief economist at Annex Wealth Management.
This could really be a change in the script, a change in the narrative around artificial intelligence, where it's no longer about what has been called the picks and shovels. That was like Nvidia, as far as with the chips that they were selling, and maybe even the data center providers. Now it's moved on from the picks and the shovels more to perhaps the refiners and the jewelers in that narrative, where it's more about what's the actual use case of the technology.
DeepSeek's popularity has also upended widely held views about U.S. dominance in the AI space and the effectiveness of Washington's export controls targeting China's advanced chip and AI capabilities. Little is known about the company behind DeepSeek, a small Hangzhou-based startup founded in 2023 when search engine giant Baidu released the first Chinese AI large language model. Since then, dozens of Chinese tech companies, large and small, have released their own AI models, but DeepSeek is the first to be praised by the U.S. tech industry as matching or even surpassing the performance of cutting-edge U.S. models.
Nasdaq futures slumped and technology shares slide in Japan on Monday as surging popularity of a Chinese discount artificial intelligence model wobbled investors' faith in the profitability of AI and the sector's demand for high-tech chips.
Technology shares around the world slid on Monday as surging popularity of a Chinese discount artificial intelligence model ruffled feathers. Startup DeepSeek has rolled out a free assistant it says uses lower-cost chips and less data. That seemingly challenges a widespread bet in financial markets that AI will drive demand along a supply chain from chip makers to data centers. Shares in Nvidia supplier Advantest fell 8.5% in Tokyo, while those of Tesla, Amazon and Meta fell more than 2% in early European trading. Joachim Clement is a strategist at Panmure Liberum.
The capabilities of DeepSeek are well within reach of OpenAI and the other providers of generative AI. But, and that's the crucial but, is can DeepSeek approach or get the same results with lower infrastructure costs, which obviously would be a major negative, not just for Nvidia, but also for the big cloud computing data center providers like Amazon.
AI-focused startup investor SoftBank Group slid more than 8%, on course for its biggest one-day fall since September, while chip-making equipment giant Tokyo Electron fell 5%. But tech-heavy markets in Taiwan and South Korea were closed. Little is known about the small Hangzhou startup behind DeepSeek, but its assistant leapfrogged rival ChatGPT to become the top-rated free application on Apple's App Store in the US on Monday. DeepSeek researchers wrote in a paper last month that the version 3 model launched on January the 10th used Nvidia's H800 chips for training, spending less than $6 million. Frankfurt-listed shares of Nvidia slipped about 7% in morning trade. The poster child of AI has seen its stock rise 196% since the start of 2024.
Imagine waking up to find $1 trillion wiped from the U.S. stock market overnight, all thanks to one Chinese startup. Meet DeepSeek, the AI company that's shaking up Silicon Valley and rewriting the rules of artificial intelligence. In January 2025, DeepSeek launched its AI assistant, said to perform just as well as ChatGPT, but at a fraction of the cost. While OpenAI and others pour billions into developing their models, DeepSeek's latest breakthrough reportedly cost only $6 million to build. Within days, DeepSeek's AI became the most downloaded app on the Apple Store, beating even its Western rivals. Founded in 2023 by Liang Wenfeng, DeepSeek operates independently, funded entirely by an AI-driven hedge fund. Their secret? A team of young, talented engineers and a focus on open-source innovation. But there's a catch. After DeepSeek's launch, global investors dumped U.S. tech stocks, questioning whether Western dominance in AI is truly secure. Some are calling this AI's Sputnik moment, a pivotal shift in the global tech race. And with DeepSeek making AI more accessible and affordable, the game has changed. So, is DeepSeek just another startup, or the start of a new era in artificial intelligence?